Hey, what's up, everyone? And you are watching What's Up, Ryan. And in today's episode, I will be covering the main types of investors and traders. Now, I think everyone is starting to take note of this space and starting to warm up a little bit. So I think right now it is best to kind of give you a few categories and see where you fare in this quadrant. Because I think the most important thing to start understanding about yourself, and at the same time, what does it take to become an expert investor or at least an expert trader. Now, this is a very important aspect, because if you're going to be putting in your money into this space, I think the very least that you could do is identify the knowledge and the skills that you have, whether or not you're able to even make the right decisions for yourself. This is something that's very necessary, especially when it comes to investing. I'm very surprised, right, through the many years that I've been in finance and especially in the investment arena, that when I speak to people, right, I think the curiosity about something new and making money kind of goes very well together, but it could be a catalyst for disaster. And a lot of people who are very inexperienced, right, despite the fact that they like the making money part, but they don't spend enough time knowing how to make the money. So in this episode, at least I'm going to cover which quadrant you're going to fall into, and hopefully by the end of the episode you're going to be able to identify very quickly where you're at. And then from then, you're going to go out there and start acquiring the skills that you need to reach the main quadrants where you need to be. All right, so let's get started. So I drew out the quadrants already, and it's actually very simple. I only have, everything to me is very binary, whether you know or you don't know. So right now, you're going to be falling into one of these two categories. Either you are novice, right, investor, or you're a novice trader. Okay, and to deem yourself as an investor, right, for the sake of this episode, naturally to call yourself even an investor and trader is already a title in itself, by the way. Okay, you don't call yourself an investor just because you bought $100 worth of Bitcoin. Okay, you don't call yourself a trader just because you went in and out of Bitcoin when it was $100 and you got out at $50 and you got lucky. Okay, you don't call yourself that. But I think I want to categorize, at least for the simplicity of this episode. So an investor, in my opinion, right, is that you already understand how to evaluate a company. Okay, and the reason why you're putting in money is two ways. One, you're going to participate, or at least you're going to involve yourself by buying the particular crypto, or you're buying a particular stock, right? Because you really understand the business model. You understand how the company makes money, and you understand by holding its shares or the crypto, you're able to earn a certain amount of dividend if it's a stock, or there's a certain amount of distribution if it's a token. Okay, and there has to be a form of evaluation. Okay, everything that you do as an investor, you have to evaluate the risk of how long your investment is going to be, how long your money is going to be tied up in this particular investment. What is the goal of you investing in this company? Whether is it you believe in the future growth of this company, or you believe that they are mature enough that they are going to be paying out a dividend that you would like to have as part of your portfolio. Okay, that is the financial objective in most cases as an investor. Now, a novice trader, at the end of the day, is just looking at making profits for each trade. The whole idea is creating consistent and profitable trades over time. So you notice that the two categories, right, kind of overlap in a way. Both require time, and at the end of the day, both obviously would require you to turn a profit. Okay, so when you're a novice investor, so let's get back to quadrant one. As a novice investor, you have to ask yourself, right, how much do you know about the company? Okay, so once you already understand what the company does. For example, when you go through, let's talk about strictly crypto to keep it simple. Okay, when you are looking through the white paper, the website, okay, you look through. Do you even know what the company does, right? Do you understand the terms that are being stated on the white paper or the website? Okay, if you don't, you're still a novice. Okay, if you don't even understand the description of what the company does, right, you are clearly going in blinder than you think you are. All right, it's like being blind and you still wear blindfolds. That's how bad. Okay, and the worst thing that anyone can do, right, is come into a group, right, like mine, right, and I always see the questions. What do you think, or what are your thoughts about this? It just goes to show how high level you are, or at least sarcastically how high level you are. And that is one of the most dangerous things, because you don't even know how to ask the right questions. So I did an episode exactly about this. If you come into a group, right, and if you've done your research, that means you've done your basic due diligence, okay? For example, this CEO seems to have a very good understanding or strong understanding of the industry, and he seems to fit the bill. However, I'm questioning his credentials. Does anyone have more insights on his capabilities? Now that's a very good question. As opposed to, what are your thoughts about this token? I hate that question. It is the most pleb question ever. It just goes to show that you are lazy and you think that a free group, a free community is ready to jump on, oh, this new guy, let's help him out to make money. Nobody cares about whether you make money or not. Everybody cares about themselves, okay? And the whole idea is to make sure that when you ask a question, you're just asking the community to see whether there's anyone who is a higher level, who has a higher level of understanding compared to yourself, so that if they happen to have that information, you take it also with a grain of salt. And if they can even substantiate with articles, or they have done a deeper in-depth analysis or research on this particular person's profile, or even the company, because maybe they are skilled in coding, they can just go to the GitHub and see what has been updated. Those are the questions that you want to start asking. For example, if you're a developer and you happen to be an investor as well, okay, you can go in and say, hey, I noticed that there's a paragraph in their code that actually compromises the network. I wonder whether has anyone caught on to this. Now, this statement in itself, it's also a question. It questions the credibility of the code involved, because you're someone who's probably skilled in that, and you obviously have interest and you want to invest monetarily as well. It's not just you coding on that particular platform. So you see, end up the questions become so solid. Okay, these are solid questions that really make people think like, oh my goodness, there seems to be an error. This person came from the community. And that's the beauty, you see, because in crypto, the free communities, right, that are being formed around these projects help it to grow and get viral, especially when things go very well very quickly. So if you start coming in and asking the right questions, that's already a plus point for you. Okay, now the next thing is to determine what is their community like. I think having a strong community is very, very important. So you would definitely immediately, the moment you participate in the ICO, or the moment you bought the token on the exchange, and usually people do this, they tend to buy the token first, then they join the community. What you should do is the opposite, where you should go in, right, into the community and start asking questions about the company. Okay, and the questions that you probably want to ask is, hi, project, what is your next 6 months to 12 months strategy of how you intend to develop and push this out to the market? Just ask that question alone. It already it should have some answers. So the answers will range from, we are now still in developmental stage. We are only having this and this. We are in this phase. From there, the person needs to know. The person, the marketing or the correspondent has to know. From there, you decide whether or not there's enough room for you to still get in. Okay, because you don't want to get in, especially when there's a lot of hype around it. Okay, and that involves also a certain level of skill to understand. Okay, and as a market maker, especially when in this space, right, there's a lot of market making involved. Okay, and yes, companies do engage third-party market makers to create liquidity and even move the prices. Okay, so you have to also understand all this as an investor. These things are either to play with you or play against you. So take note. Now, as a trader, novice trader, you probably only know how to buy and sell. Okay, that's your basic, and you want to buy, sell, and you want to learn very, very quickly about how to at least do basic charts. These days, there are plenty of youngsters and of course chartists, right, that are already able to do this. And the reason why people like to learn charting, because you don't have to read. You don't have to read too much. You just see the chart. And when you see the chart, right, and as long as you understand how the indicators function, you are very quickly you are able to determine whether or not you should enter or exit the trade. Okay? What kind of stop loss you should put in. What kind of take profit you should do. By honing your skills, right, over and over again, that's why people prefer to trade rather than invest. Why? Trading, in a way, right, you are able to be more liquid. You're able to enter and exit the position regularly, depending on whether you're doing it manually or with a bot. Whereas investors tend to kind of, okay, I don't have time for this trading stuff, and at the same time, I don't want to have I don't want to be taxed, especially for trading. So taxation is also one consideration, especially if you're novice. You better go and check your country's taxes on trading, because from what I understand, right, it can go as high as 40%, especially when you're 30 to 40% on trading profits. So every $100 you make, right, $30 to $40 goes to the government, and you need to be able to track all this, especially when you're a trader. Okay, don't assume that just because you are, young or whatever, you don't have to pay taxes. The moment you start making an income on your trading, you are already going to have to declare. And at the same time, as an investor, take note, there can be capital gains tax as well. It depends on your country. So I'm not a taxation officer. Go and check it out before you start. Okay, so now that we've covered the basic stuff, okay, now as an investor, or I'm going to categorize, where's the thing? Okay, wait. Okay, now this is where you need to be. Okay, this is where you want to be eventually, which is a savvy investor. Okay, and eventually you will want to be a pro trader, of course, right? So there are full-time investors, okay, but very rarely are they able to do that, because for you to be a full-time investor, right, you truly must be someone who has already accumulated a huge amount of wealth. I'm not a full-time investor. I am a savvy investor, but I'm not a full-time investor. My main sources of income are from my business and whatever recurring residual income or passive income that comes from other investments that I have placed. Okay, so I'm not a full-time investor where I only focus on investing and flipping. There are people that do that professionally. For example, venture capitalists, they are paid to be consultants and or even advisors for projects, and that gives them an income. Okay, that's one. But then they are also considered savvy or professional investors, because their job is to focus on evaluating the companies and making sure that they can either sell it off to the next round. That means they can offload exit the company to the next round to bring up the evaluation, and they can exit. And they have to have already negotiated that prior to when they first came in. Okay, at the seed round. They can choose to stay, obviously. There's a clause for them to choose to stay if they decide to do so. See, all these things, right, as a savvy investor, you should know. You don't talk about your exit only after you pen the deal down. You see, that's the difference. You would know how to exit even before you entered. All right? Listen to this. Most investors, right, because they buy it from so-called the novice investors, they're buying it from the secondary market. As long as there is enough liquidity in that particular stock or crypto, you are fine. But I think especially those who are a little bit more senior and they have more money to place into the crypto market have realized that sometimes the volume is not enough for them to exit the whole position. It goes to the same when you are entering it as a private equity or an early stage investor. An early stage investor, when you are entering, don't even think about getting your money out for the next 6 months, 3 months, or whatever. Okay? There's no guarantees. The investment suddenly becomes illiquid because it falls under the realm of private equity. It's still a private placement. So you'll be surprised that people who have money are not necessarily savvy. It's just that they have money. They are taking a little bit of, they are willing to take a certain amount of risk for the amount of money that they have accumulated. Okay, so now, very quickly, let's go to the pro trader. Pro traders are basically already very seasoned that they can make a full-time income from trading. Okay, and you don't immediately become from novice. You trade for 1 year and then you say that you can be a pro trader. Very rarely do people do that. I have heard many success stories that do happen, but out of all the many success stories, you have a lot of failures as well. So before you decide to, all right, Ryan, after watching this episode, I'm very, very inspired. I think I can do it. So you only have a war chest of about maybe $1,000, and you kind of the last few weeks, right? You started to make some decent money because the market started to move. Pro traders go through many bear markets and bull markets, many. And they are able to thrive and know what to do in each and every single situation. Do you know about shorting? Right? If you already know, great. If you already know how to do hedging, do you know how to understand how to offload risk on another derivative product? See, all these things, right, you have to use. And what's your position sizing each time? Are you disciplined enough to take profit? Do you know what's the ratios that you need to do? Do you know when to add? When you need to add on to a position, when do you need to reduce the position? All these you need to know, right? So all these things, right, if you are still not sure, you are still under the category of novice trader. At the same time, if you cannot make a full-time income, right, as a professional trader, okay, that means you definitely know that every day I'm going to be able to make a certain amount. There are people who are able to successfully do that. And as a trader, you can be someone who can reach $1 million on your own. There is very little, there are very few businesses, right, that can allow you to do that. Obviously, you know, you talk about e-commerce and doing any type of internet marketing. Through an X number of years, you can gross up $1 million in sales, right, if you know how to do the strategy right. But for trading, it is very easy for you to profit and make $1 million if you know what you're doing. Obviously, you have to have a proper war chest and a system in place. As an investor, obviously, you can do the same thing. Because for investors, right, the moment they nail down what they want to invest in already, and you're pretty confident about your investment, in fact, the good thing is that you let the company do the work. Okay? As a savvy investor, right, you practically just mean that you don't have the idea on how you're going to build it yourself, but you are able to let other people do the work. There are two types of investors: the active investor and the investor that just, okay, I'm just the money. Okay, sure. Those investors, right, are the kind that subject themselves to the worst kind of situations because they don't want to involve themselves with time and they don't want to lend their expertise. Which is fine, okay? Those are welcome in many, many scenarios, but I don't want to go into that. Then there are the investors that say, I want to take on an advisory role and I want to grow with the company. I want to make sure that at every stage, I'm aware of what's going on, and at the same time, if I can help you, the company, to partner up to partner up and of course push the business forward, that is a very, very good investor. Okay, that just goes to show that you are someone who is not only having a skin in the game, but you want to grow with the company. And that is what I've been doing. Okay, I've been investing my own personal money, and at the same time I want to grow with the company by lending my resources to help the company grow, or I use my network to assist the company in any way I can. Now that is a savvy investor, and not only savvy, you are a valuable investor. Okay, now as a trader, it's a little bit more straightforward. Could you actually incorporate the information as a savvy investor as well? Definitely. And I believe, right, that these two, okay, I believe that although both realms don't really fall into play all the time, but it doesn't mean that you cannot acquire the information or knowledge as an investor. I feel that I admire traders who are very familiar about the project. Okay, but very few traders will take the time to go and know that, because they want to only focus on the technical indicators that will help them to make a decision on a daily basis. Because every morning, whenever time that they decide to trade, they are going through a filter. They're going through a filter of what trades fulfill their criteria. Okay, so that already has a lot of work. As a professional trader, you're always looking for opportunities on the market, whether is it crypto, forex, the options market, the futures market. Everything already requires a lot of information and skills to get the job done. Okay, so imagine that as an investor, right, day in, day out, I don't have to keep looking at my investments. All I have to do is just monitor how the progress of each company is doing. That's why when I mentioned in many videos, as an investor, I never invest in more than 5 things at one time. And if I'm not familiar, I don't even invest in it at all. Okay, I'm not the kind of person that will, I'm very curious about what this does, let's throw some money there. There are people who do that, but usually more often than not, they tend to lose money. There are occasions where they luckily made money, even though they knew very little. But as the space matures, you have to understand that this, when it's involving money, right, people will take the opportunity to take that money away from you. Especially the more lazy you want to be, the easier it is for them to take it away from you. My advice, if you're still in this category, okay, go for more investor pitches. Okay, get yourself invited by some way, right? Involve yourself in certain circles that allows you to go for free investor talks. There are investor clubs around, or investor networks that are always happening in every single country. So make the effort to at least go and sit down and hear how the pitches are coming about. Try to sniff out the bullshit. I think that's the key word that you want to know. As an investor, right, you need to be able to sniff out the bullshit. If you cannot sniff out the bullshit in a particular investment pitch, you are so dead, and you're going to go so broke and lose all your savings in a very, very short period of time. Now, for the novice investor, you probably want to understand how markets work. Okay? When I talk about how markets work, I'm going to define that for you. You need to understand that in the crypto space, a large part, okay, there is a level of lack of liquidity, which will affect your exit and your stop losses. Okay, this is one issue. So at the same time, you have to understand, right, that you have to track sentiment. Sentiment is very, very important. If you don't track the sentiment of the market, or you don't understand it enough, you are always going to be behind. So it's okay to be slightly behind as long as the sentiment curve or the wave is strong enough to carry you, and you are able to still take off a piece of that profit. Okay? So if you are not able to at least understand sentiment, or what is the market, what's the feel or the sound of the market, right? It is best that you really start understanding that. So I have a few books that I want to recommend. Okay, one, if you're really quite serious, okay, let me just extend this. One, okay, right now the crypto space has very, very little in terms of giving you a full understanding of or a proper evaluation model. But the traditional stock market is where you can find all this information. And I think it's very important to get the fundamentals right. So this is the security analysis book. I think this is edition, or the 6th edition. There's obviously a newer edition. I bought this so many years ago, but it's still a very viable and good book. Yes, it is very thick, but if you want to make money, I think it's better that you spend some time every afternoon, at least 1 or 2 hours, trying to clear a few chapters of this, okay? And then from then, once you understand, you're able to manage your risks, okay? Managing your risk is one of the top priorities in investing. If you don't even know how to manage your risk, or you don't even know how to define what risk means, better that you go and watch YouTube, or whether you watch YouTube for some cat videos or making slime, okay? That's probably where your category is. So, but other than that, you should be spending your time understanding how this space works and how stocks work, how to evaluate. Okay, that's what it's all about, this whole book. Okay. The next thing that I find very viable is private equity. Okay, now private equity is a little bit higher level. You may or may not be at that level yet, but the fact that if you plan to invest in STOs and ICOs, okay, usually they fall in this category. Okay, they are young companies. So it'll be good to get some structure when you start approaching and investing in this space. Because if you don't have any structure or proper governance, right, you're gonna get owned, okay, by the people that they may not have any malicious intent, but there is incompetence in fulfilling fulfilling what they intend to do, okay. And if they are incompetent and you still decided to invest in them, unfortunately, that's on you. There's no one else to blame. By the way, all these things that I'm sharing with you right now, there's no one else to blame except yourself. Okay? You cannot blame the company. You cannot blame the trade or the market or whatever. It's on you, you know. It's really on you. Unless it's some black swan event, right, where it kind of catches you off guard. Other than that, you should be relatively profitable over a certain period of time. Now, however long it takes for you to become a profitable trader or investor, I leave that entirely up to you, because this is a journey. You don't immediately become an expert or a professional overnight. It doesn't happen in a million years. I know there are a lot of people who made a lot of money in 2017, but I guarantee that these people, right, if they're still around, they would have already spent their money already, okay? There are few that have the financial knowledge to make the wise decisions, and that falls under another category, which is financial management, okay? It's a whole different ballgame and a whole different episode, but I hope that in this particular episode, you already understand enough about where you are in the quadrant, okay? And quickly go and get yourself to the next segment of the quadrant so that you can start making some serious money. Okay, because if you're in quadrant 1 and quadrant the initial half of the quadrant, it's a good journey for you where you start learning. It is important. Everybody has to start somewhere. Okay, everybody has to start somewhere. But you want to quickly get to the savvy investor and pro trader quadrant so that when there is an opportunity that comes about, you are confident and skilled enough and have the knowledge to put in more of your money, so that you can go out there and capitalize on the markets and crush it. Alright guys, so that is all for the episode. If you felt that this episode was of value, don't forget to give it a like. We have CG Protégé that is already open, and if you're someone who is serious about looking at this space from an investor and trading standpoint, CG Protégé is already open. Go and click in the links below. Joining is for free. You get to enjoy a 2 days free trial, especially if you're new. But the moment the trial ends, you're able to join CG Protégé Pro, where you're gonna get announcements, the quarterly report, And the quarterly report is essential, guys. If you don't have the quarterly report, you're going to be probably shifting and sifting through this whole space in the dark, right? And the quarterly report is something that we wrote up, where we as the 3 directors are giving our direction, our portfolio, our allocation, what is the risk profile, everything is there, and how we evaluate cryptocurrencies, okay? That being said, subscribe to the channel, guys, if you feel that it is going to be helpful to you, and click on the notification bell so that you do not miss another episode. See you guys and have a great week.